a selling price trader. So welcome again, and on this particular video I will be touching to a great extent about the relative strength analysis. What I mean is, how to know which of your peers is going to outperform the other one. I'll do a better one than I've ever done in other videos, so ensure to stick into the end. I've been wanting to do this. I'll be touching on it, a little bit, not so too deep, but at least better than I've ever done. So what I mean is that, as a forex trader now, you might be trading forex. This applies to both forex and the futures trader I'm going to talk about. You might be trading European dollar. I'm like, okay, I'm an European dollar trader. But then you see something, you went over to the British pound. Let's say you went short on the European dollar. So you went to the British pound. I like, what? Man, look at this. Like the British pound just did like 4, 5, 6 times the move that happened on the European dollar. Probably you had a wind here, or maybe it was just ranging. Like, that's so frustrating. It was consolidating. Just a range bound market, just moving horizontal, not even going downward. And then you look at the British pound, it's like, this guy is like, it's going fast. And you'll be like wondering, like, what is wrong? So nothing is wrong. You just need to understand how to use relative strength analysis. I'll be saying that on the video. That's what I use personally. And also the same thing applies for ES and NASDAQ. You might be on ES. Let's say you went short on ES, and then you look up NASDAQ after a few minutes, maybe 30 minutes, and you saw NASDAQ was like crazy, like 6, 8 times what ES did. And like, what, like, I should have went short on NASDAQ. Yeah, so I'll be telling you how I do the relative strength analysis for that, and you'll be able to, more times than none, be able to be on the one that is going to be the outperformer. So wasting no time, here is the British pound. So you can see this. Here it's a higher high. So look at the European dollar. That's a lower high. Look at this high. It's a lower high. You see that? It's a lower high. So this tells me what? I'll immediately do what? Check the British pound again. You see it's a higher high. This made a higher high. The European dollar made a lower low. Do you notice that? It made a lower low. So right now I know the European dollar is going to be what? It's going to be stronger to want to go down. It's going to be the one that want to go down faster. So I'll be putting a limit here. Let's see. So I believe you get an insight on why I'll be doing the European dollar and not the British pound. So you see this lower high, and it is. So I'm watching. Price is just willing to run quickly. I don't want to chase price, so I'm watching really calm. I'll be saying some important things in the video, so I'll try to do my best. So just try to listen. You might gain something. You might know it all. Nobody really knows it all for real, but you can just gain something, even if it's just 1 or 2. From what I said. So try to be on, and you can you can comment your thoughts. If you have any questions, suggestions, I'm open to receiving them all. And feel free to also contact me. My email is there, my Twitter handle, that's X, rather, X handle is there. So you can also subscribe, so anytime I drop a video you can see. So I'm watching price. It's wanting to be so aggressive, but I won't be chasing price. Like, I'm okay with it going without me. I don't care really. But I hopefully think I should be able to get an entry, but I don't want to chase price in it. So I'll be using the limit instead of entry, I think. So let's put it at this level. So at 1.08102. Come on, load up. Yeah, so that's the continued encroachment of that candle's wick. Let's see if price will be willing to go right there. I'm watching the higher time frame to gain more insight. I'll be very patient. I want it. By the way, it's 3:07, so I'm trying to trade the ITT London silver bullet. It's 3 p.m. to 4. Sorry, 3 a.m. to 4 a.m. So it's 3:07. Now 3:08. So let's see if price wanna gravitate here. Might not wanna go. Let's shift it a little bit here, and I'll put my stop loss right there. It's very important. At the beginning I didn't put it, but it's like price can go there and just rip and stop me out. Good. I'm gonna say like, what? Yeah, it's good, because if I don't have a stop loss on, it can rip minus $1,000, like -$1,000. That's crazy. But here's the stop loss. So even if something happened, even if it go beyond this 400, that's $450, probably $500. But it's still better than -1,000, -3,000. You can see prices just wanted to know lower. I'm not gonna chase you. No way. I'll be patient. So, the stop loss is it's very important. It's pivotal. Like you really want to have stop loss on all, even on your limit, on your entries. You can be wrong. Like I'm open to being wrong right now. I don't have to be right. So that green line over there is the bearish order block. Actually, it's a higher time frame. So I'm trying to see. I think it should be. Let's see this 1.07821. About that level. Should probably wanna animate to that level. So there's a 15 minutes time frame. That's an inversion fair value gap. So that's the law of potential inversion fair value gap. It's a BC that has been overlapped now. So once this kind of close in less than 3 minutes, I'll be knowing it might retrace as deep as that. So if it retraces there, which I anticipate, then my order will get filled. But I won't chase price. No, I won't do that. I've done that in the past. I don't want to do that no more. It's not good. So it's better have no trade than to actually chase, because you can just chase price and get a very bad entry, and it will just come back to where you have expected to it. More times than none, it has happened. It will always come back kind of like, why did I chase price? Like I should have waited. Like I've seen in 100 times I chase price, 90 times always come back. So maybe just that 98, seriously, like it's come back most time. But those 2% that goes, you can do away with that. So I'm looking at it to, veer out which one is, if at times it switches, the stronger switches. It might be at the beginning for the European dollar, then can you see what I'm talking about? Look at the European dollar. It has traded below this low. You can see that. You can just rewind the video like 5 seconds or 10. You see the British pound hasn't even gone below all these lows. Look at the European dollar. So there you go. That's what you use relative strength. You can, relative strength analysis for. And that's it. So imagine someone's trying to go short on the, British pound. You might get some profit, but come on. Look at this, it's running. So let's see, it's 313. From 314, 315, I'll be anticipating if price, because 315 actually is to give a second potential entry. 315 it might be earlier today, 314, I don't know, but 315 is to give an opportunity. You can see how it's going back. Imagine I chase price. So I'm looking at that one as like an institutional order flow into do, and if price gets into it the second time, I hate when institutional order flow gets a second repricing. There are two specific areas I hate to get a second repricing. One is the institutional order flow introduced. Second one is an immediate rebalance. If those two areas get repriced a second time, it's really, so right there it's engaged my limit. So I'm short. So I actually got stopped out. So you can see that I told you if an institutional flow what the hell, tongue twister. If an institutional order flow entry deal gets a second repricing, it drastically reduces the odds. So I'm still gonna go short since that bearish order block hasn't been. So this green line, I'll be putting my stop loss above that. That's a bearish order block. So I'm anticipating it to be able to stop price. Price might weak up to that level, but that will be my last line of defense. That this weak consequent encroachment before 1.08129. That's what I'm looking at my last line of defense. So here it's bearish order block, this green line, and I can see some bearish order block also here on this 1 minute time frame. I can see multiple areas, like I can see the BC. Right now we're in the CB. It's also an imbalance by the inefficiency. Look left, there's also an inversion favor. Like there's a lot of things there. So if it actually fails, then I just might be wrong. So I noticed something. The first entry was 3 million shares with a stop loss of about $450. That was stopped out. Imagine I had no stop loss. The second entry now is 50% of my initial total position size, which is 1.5 million shares. I didn't go, some of you, okay, you get stopped that you want to revenge, so you go even the same amount, or even most times you go more. So you'll be like, okay, I went 3 billion shares, I'm gonna go like 5 million shares. Let me just break it down to little. Let's say you're in the index, you went 5 contract, let's say you just went 1 contract short, and you get stopped at, okay, I'm going 3 contracts short because I'm right. So that's the low hanging fruit rate than 1.08056. So low hanging fruit objectives. So back to what I'm saying, you'll be like, okay, you want to revenge, you want to go three contract more short since you are right now. No, you can't be right. Yes, good, but you can be wrong, bro. You can be wrong. So that's why ICT teaches it. Once you have a loss, it's that you don't trade that session, you wait for the next session. But sometimes you can be right. Because it has traded to my Q zone, and if it really wants to go down, it should do that, in a short time. But I do go half, like if I go, let's say I go 6 contracts short, and I get stopped out, so I'll be going 3 contracts short the next time I'll be going. Even if I'm be waiting for the next session, I will not trade with the same risks as I did the first time. Why? That way, you can never ever lose as much as you lost the initial time. That's what we call capital preservation. So that's an inefficiency there. Hopefully, if price want to draw there. So it's conserved. You can see this one is just $315, and it has a wide stop loss because price seems to be very fickle right now. But it's not as much as the 450. They are a little bit close, but it's not as much, even though this is wider. So that imagine this was $3 million, 3 million shares. If it's 3 million shares, this would be like 630 negative, like minus $630. That's crazy. That would be like 1,000 plus already, just this London session. So that's how you mitigate losses. You don't have to be very aggressive, repulsive, impulsive. No, just be calm. So I'm watching price. I'm just going back and forth. See the British pound. Can you see that? Look at it. Look at with the British pound. It's not even look at that. Look, it has taken the 306 high out. This guy. Look, this guy actually did that, but look how much this guy went down. So one more thing here. I used to use the dollar, actually. The dollar index. That's the real thing. It's not just lower, high, high. The dollar index. So you can rewind the video. I checked the dollar index real quick. Once the dollar index, I'm going to say this, please pay attention. The dollar index, if you want to go short on the forex, be it the British pound or the European dollar, so I want to put a buy limit there. So I'll be taking 500,000 shares off if price goes there. So once the dollar index goes and let's say you want to go short on the European dollar, and you see the dollar index had you want the dollar index to be what? To be risk off, right? That means risk on, risk off scenario. I used to mistake both of it, but whatever. As you are going short on the forex pair, you want the dollar index to be going up. So you look at the lows on the dollar index. Is it making a higher low or a lower low? That is it going lower with a lower low, or do you see a higher low? As you want the dollar index to go up while the forex pair goes down. If the dollar index have a higher low, that is, it failed to make a lower low, you will come to the forex pairs and find the one that makes a lower low. I'll repeat that. If the dollar index fails to make a lower low, then you come to the forex to find a pair that has a lower high. So it's not a lower low because you want to sell for the forex. The pair with the lower high. So if the dollar index again for the last time makes a failure to make the lower low, then you go and look for the one that has what? A lower high. If you see the European dollar with a lower high and the British pound with a higher high, I'm telling you, the European dollar will outperform the British pound. The British pound might go down, but man, the European dollar will dust it. Inverse is said. So I'm looking at that other block price. I want to spike there. Inverse is said for a lower low. Are we talking about the buying? If I have time, that's if you're buying on the forex pairs. So, but now I'm focusing on selling since that's what I'm doing. I'm gonna make a video for buying and do even better than this. So just try to stick to this. I'll do my best. So that other block has been traded to. I want to see it rejected. If you are selling short on the forex pairs, and I told you then if dollar failed to make a lower low. Now this scenario, the dollar index made a lower low on the 1 minute time frame. Sometimes you can use 15 minutes, but the best is 1 minute time frame. The nearest time lower low. If you see it make it a lower low on the dollar index, go right to the forex pair and find the one that makes a higher high and sell it short. But the one that fails to make a higher high should be weak. Probably like a six sister scenario. That's a concept in ICT. But no, this time around using relative strength analysis, If the dollar index makes a lower low, go right to the forex pairs or your futures index, the ES or NQ, European dollar or British pound. It doesn't matter what you're trading. If the dollar index makes a lower low, go to the opposite pairs that is crossed against the dollar index that makes a higher high. That one will be the outperformer. It would. So let's say the dollar index makes a lower low and the British pound made a higher high and the European dollar, okay, I love that reaction, and the European dollar made a lower high. Don't get it complicated, okay? I'm trying to do it slowly. Let's say the dollar index makes a lower low as it swept out a short-term sell side, and the British pound made a higher high. It swept out a short-term buy side, but the European dollar failed to make a higher high. Don't go short on the European dollar. Go short on the British pound despite it making a higher high. Right there, it's gonna outperform more times than none. It will deliver 2 times faster than the European dollar. Like it will run. Like you will see it. The European dollar might go, but the British pound will be bonkers. It will be going crazily short, going down. Like it will be offering sell-side delivery. The algorithm will, you can see that. You can see this. So that's the 2 scenarios. You can inverse it for the buy, but right now I'm selling. So anytime I'm buying, maybe I'll be trying to do that. I might touch on it before this video ends. But look at this. You can see how it's falling down. You can see that. You can see that. So right now the right thing I should do is to reduce this risk by 2. I'm not sure it might want to go up again, but let's watch. Okay. So hopefully you gain some insight. That's for the relative strength analysis, by the way, for selling. So I talked about both high, lower lows, higher highs, failure to make it higher high, all those kind of things. So that's like a balance. This largely price is trading to a balanced price range. So if price close below this balanced price range, this BC it is in currently right now. And looking at the left, you can see it. That level is balanced price range. So I want to see price in candle closing below it. It might be better in the 3-minute time frame, but I really want to see it close below it. If it does that, then we're going to fall lower. If it doesn't, then I'll be permitting it. Like it might want to retreat deep, and possibly I might get stopped out. So I'm almost out of battery. I might get stopped out, and it's okay. But I'm watching if price wants to trade. So let me see the 3-minute time frame. Right there. If this candle closes this way, I'm telling you, the price should, I expect it to fall. But if it pops out and it rejects, then I'm giving a tolerance. I permit it. I might be stopped out, Yes. But I'm telling you 2 things that I'm watching now. So I'm accepting the fact that I'm indifferent to the outcome. Okay, I can be stopped out, and I can, get a win, But this is the condition. If it doesn't reject and goes up, I don't want to see that. If it will begin to reach CP, it should be an institutional order flowing to deal. A break gap would be better and ideal, but right there it should be like an institutional order flowing to deal. So I might get short. I won't go a high contract. If that closed low, I would have gone short a higher contract, but I'll be looking at 1.08100. I'm going 50,000 shares. That's very little for me. It's like just like selling 0.001 lot. So, it's all based on the account size. So, right there, I'll be going short. Let's see. This is going deeper than expected. Let's see if it wants to fall lower. So the price is not wanting to close lower than that. Sorry if you hear the sound, it's the table in front of me. The price is not wanting. Okay, it's rejecting low. So at this point now, I wouldn't want the price to be doing back and forth, like beyond my entry. If it's doing that, then I just might be stopped out, and it's okay. It's okay. So like I said, price is not. I should have just waited for price to close. Sometimes you just want to be in it. That's why I put 50,000 sell share limit, because market order. Because normally I would have done like a 500,000 if it's closed below that balanced price range, like below 1.080880. That level, if it has closed here, I would have do like a 500,000. It will not be 2 million share sell, but I'm not confident enough. That's why I went very little. So I'm watching price right now. So looking at the European dollar right now, it's it's not wanting to go down. It's still like I see. It's like it has a little bit business. Or I just might be wrong. I told you I accept, like, I'm vulnerable. I accept the fact that I can be wrong. Not like I'm vulnerable. Like, I am welcoming the fact that, okay, I could be wrong. Just like I could be right. So I'm watching. I'm watching right here. You can see the British pound. Like, look at that. It made a higher high. Can you see that? Can you see that? Like, literally, are you seeing it now? A higher high. Can you see that? Now, look at the European dollar. Is there any higher? Can you see? Is there? It's a lower low. It's not going up, which means you can have a good stop loss here. On the British pound, if I had a stop loss there, I would have been stopped out. That's an advantage of knowing relative strength analysis. Like, there will be retracement during a trade. Trade doesn't just go vertical. Like, what is this? Trade doesn't just fall lower and goes down on a straight line. At times in lower resistance liquidity run, but it doesn't just go straight lines. But this back and forth, another plus for it, if you know the relative strength analysis, is that you can have a better stop loss and it wouldn't get tagged out as fast as it will have getting taken out if you are trading the wrong pairs. So let's say some of you might have experienced it. You went short and you just get stopped out and price to go to your level, like, and you check the European dollar, like, it didn't even retrace. Like, what the hell am I selling the British pound for? That's it. So look at this now. It's telling you this is the weakest. The British pound it wants to go up. It's not ready to. It might go down later, but it's not ready right now at the moment to offer sell side delivery as fast as as the European dollar can offer it actually. By now, this is 8:30. Price should actually go lower or stop me out. 8:30, I've mastered, but I've studied each minute. And 8:30, the 30 minutes, 8:30, 10:30 used to be a reversal or a retracement or a continuation of the underline. So it's either right now it's 8:31 at my own time, but New York time it's 3:31. So that's the London, 3:31 a.m. right now in New York. It should either reverse now, stop me out, or it should continue. That's what 10:30 is to the 30 minutes of the silver bullet. That 30th minute, the 50th minute is the macro, but the 30th minute is like a retracement. In my price are going down, then 30th minute will retrace and come down. It retraces to premium and continue, or it will be a continuation if price has not been running. So it's either continuing or it's reversing at this condition now, because price has not gone down. Let's say don't having a retracement to a premium that has already been, But right now, it's either it stops me out right here and there, or it, continues, it falls lower. So it either reverses or it just offers quick. So I just wanted to do it quickly right now. So I'll be watching it. I'm getting my charger. Okay. So I'm watching it. I can get stopped right there. I told you I should have reduced that, once. But one thing, I used to delete my limit. Price can come there and just engage it and just stop, it give you a very negative balance. So I'll be deleting that limit. I want to show it to you at 1.08056. So I'll take it out. So that's the trade. Hopefully you gain some insight on the relative strength analysis. Have a nice day, everyone.